morning, everybody, and welcome to Taco Tuesday, the first Taco Tuesday of April. And we are going into Taco Tuesday, the first Taco Tuesday of April, having not only closed green on the SPX above the previous close 4 consecutive trading sessions in a row.
It was not what I wanted!
But we have done it having had 5 of the last 6 trading sessions trading less than 35 points. Volume has completely disappeared. In fact, I will bring you over to what everybody has access to, which is Yahoo Finance. Yahoo Finance, and start looking here. April 3, 67 million. Obviously, end of the month, March 31, had 112 million. 69 million March 30th, 77 million on March 29th, and 62 million last week, Tuesday. Now, you will scroll as far back as you want to scroll, and you are not going to see a setup like this except over here during Thanksgiving, where you were trading virtually nothing the week into Thanksgiving and then the following days after. The market isn't stupid. The market isn't QE. The market isn't people going absolutely apeshit on stuff, which, if you want to go out and have a look, NVIDIA, for example, just an example. On your April 6th, you have open interest, couple of thousand all the way you want to look, both sides, to the downside, to the upside. Come out here to, let's go May 5. You have 0 open interest anywhere. Nothing. Let's do another one. SPY. Wow, that's popular. A couple of people know about that. And we will look at April. Let's look at Friday, okay? We're not going to go 0 DTE. We're going to go with Friday. And Friday here, you got a couple of 20,000s, got a 35,000. You know, there's obviously, here's a 47,000 on the put side over here at the 400s. And this is going out for Friday. Let's go out to, you know what? We'll do April 28th to make it a little bit realistic because it's the end of the month. What's that? There's no open interest. Over here on the put side, there's no open interest. Point being, you are captured inside of a bubble, inside of a bubble, inside of a bubble, which is inside the bubble of the matrix. You've just had 5 trading sessions, trading less than 35 points. And if you can't see the forest for the trees and you completely suck at your risk management, go outside of the forest, go to the beach, or go out in your backyard and go jerk off and wait until there's some movement so that you can actually start trading. Because that's the way that it works. You will get into these stall periods, just like we had over here in February, where the same personality traits were starting to show up all over social media. Saw it in the chat room. I've been seeing this for 12 years. People scratching because they can't push a button and get something to actually make anything progressive. And here we are. From the January lows, 260, which is a major absolute buy, and everybody who was here in January knows that we were aggressively bullish. We are up 13.4%, 13.14% from this drop 3 weeks ago. Now, if I can remind you, not that I have to, but over the last 3 weeks, you've had the Fed go, holy fucking shit, we got to do something. You had the Treasury go, holy fucking shit, we got to do something. And now, over the weekend, you just had OPEC go, we're going to fuck these guys while they're bent over. And that's exactly what you got with your OPEC price cuts. And I'm going to share something with you here at the end of this video to open your eyes, because I know 90% of you have absolutely no fucking clue what happened back when they did this before. It doesn't result well in their long end game because it's what they're triggering in the initial incept of it. So sticking to the charts here for now, you got the August 19th gap over here on QQQ 323. Now, August, we're talking about SPX being up there in the 4300s. As you know, it's not in the 4300s. 23.9% year to date. Year to date. Crude, which again, I will share some insight with you at the end of this video off of that December low 161.8, 150 extension to the downside on this move down, perfectly for a major 4, and now starting to progress back upwards. 83, 86, 200 day, 400 day moving averages, establishing a presence up in this 83, 86, which is not going to happen on a 1-minute chart. It's not going to happen on a 5-minute chart. After it is established, then the move progressively goes to the 101s and the 108s. Zoom you out a little bit wider so you see where we are. And there, now you can see where we are. This is the 1, 2, and you should be looking at a 3 heading back up there towards that big major 147, which you will see when you see the video later on. Coming over here onto the VIX, and if you do not respect VIX 1811, that tells you the same thing kind of been saying for a couple of weeks now, which is go out and buy June, go out and buy June, capture the entire thing and ride it all, and you still want to stay on your 1-minute chart, congratulations, you're an idiot. VIX 1811 right here, undoubtedly the move minimum for this dip or progressive downside. We don't know which one it is yet. 2102. 2102, 22, then we'll see what we're working with if, in fact, we are topping off. Now, you say topping off. Well, okay. Here's your QQQ with your full moons. And here is a pretty basic kindergarten chart pattern drawn. Resistance line moving up. These support lines on these aggressive moves up, moving up to that resistance line, and the resulting effect that has come off of those moves up to this resistance line, which is since October when the low was placed back over here. Now, nobody has been bearish. Everyone has simply, if you have, been looking for an aggressive dip to be able to buy. As I started out the beginning of the year, we are looking for 4,300, 4,500 on the SPX, and all of my 22 upside targets were all blown through back in February on all of my major names. So this is your QQQ, and here is your SPX. And look at how your full moons just happen to be where they are. And here is your April 6th, and no need to pay any attention to this trend line. This trend line's only coming from your all-time high, your March high, just fractionally missing your August high and making perfect contact over here with the February high. So pay absolutely no attention to that. It's completely meaningless to those that are smarter in the room with some better ideas with what they're looking at. So we'll look over here on the 30-day coming off of this move. And once again, you can see how we have been bullishly charting for where this upside potential will be headed to. And it has obviously made multiple mutations where it is now very aggressively having passed that 4105, 4104, looking at that 4136, 4140, and you have the 50 retracement from the all-time highs to the October lows at 4155, which again, I behoove you to zoom out on your chart and see what that actually means, because you're looking at yourself and saying, I know what I'm doing, and that's where you're at. You're right over there. And again, with these moves and these retracements and the way that everything really works out, the time now is to buy time. Buy time, buy time, buy time. The VIX is giving you a gift. The VIX has been giving a gift for more than 4 days now for you to be able to go out and take May, June, July, August, September, October, November, December, January, February, March, as far out as you want to go. The VIX is telling you, I promise you, you will be rewarded for your movement. If you want to trade the 0 DTEs, you want to trade the 1 minute candles, you want to trade the 5 minute candles, when you're sitting here on a 33, 27, 31, 25, 29 point range, you're wasting your time. Trade of the week, 4105, 4100 spread over there on the SPX, looking not only for a red week, but looking for a close below 4100. Paying almost $4 early this morning as we have a gap up of 14 points. And we will be filling that 4136, 4147 gap, getting rid of it, having no further gaps to the upside that need to be filled above where we have already been, which is 41.95.44. Happy Taco Tuesday. I am not bringing the LeBron James family in today, but I am giving you a taste of your own medicine so that you can see where you came from, where you are, and how history tends to repeat itself. Have an amazing Tuesday morning. Catch you in the chat.
July 11th of that year, there was another important first. The price of oil hit $147 a barrel, the highest price the world has ever seen.
When oil began to go over about $80 a barrel in 2007, we saw something very interesting happening. All the other prices for all the other goods and services started to go up.
Most of the people who follow the price of oil for a living say it's headed for $100 a barrel, and quickly, as early as tomorrow.
When oil hit about $122, $123 a barrel in early 2008, we had food riots, you recall, in 22 countries. When oil hit $147 a barrel in July of 2008, all the prices across the supply chain for everything we buy went through the roof. And in that month, July 2008, purchasing power shut down all over the world.
It seems that everything is costing more.
Food costs expected to rise 4% this year.
Just 60 days after oil hit $147 a barrel, for the first time in history, the stock market fell a record 777 points in a single day.
The worst day on Wall Street.
The market fell as if down a well.
We're down over 16%.
Because we're now down 43%.
The Dow traders are standing there watching in amazement, and I don't blame them.
And that was the economic earthquake. The collapse of the financial market 60 days later, that was the aftershock. And so every time we tried to regrow the global economy at the same rate we were growing before July 2008, oil prices will go up, all the other prices for everything we buy will go up, and it'll shut down over and over again.
Every time the price of oil goes up, a few months later, unemployment soars.
So we have this catch-22. When the oil price is low, that stimulates economic activity, that creates more demand for oil. As demand increases, price of oil goes up, and the next thing you know, we have a financial crisis, and we start the cycle again.
Every 4 or 5 years, we're in these cycles of growth, slowdown, growth, slowdown. That's the end game.